CoreWeave, CRWV, has become one of the most closely watched names in the AI infrastructure trade following confirmation of a deepened strategic partnership with NVIDIA, highlighted by a $2 billion equity investment at $87.20 per share. The deal underscores NVIDIA's confidence in CoreWeave's execution and cements CRWV as a critical backbone in the emerging AI factory model, with plans to deploy over 5 gigawatts of AI compute capacity by 2030. As the largest of the so-called neoclouds, CoreWeave occupies a unique position between hyperscalers and AI model developers. Its $55.6 billion revenue backlog, anchored by long-term contracts with OpenAI, Meta, and other AI leaders, provides rare forward visibility in a sector defined by capital intensity and supply constraints. The expanded agreement commits CoreWeave to multiple generations of NVIDIA infrastructure, including Vera Rubin GPUs and Bluefield networking and storage systems, reinforcing its status as a first call destination for next-gen AI workloads. That said, sentiment is far from one-sided. Community debate has intensified around insider selling, leverage levels, and balance sheet risk, particularly given the aggressive pace of expansion. This tension between world-class demand visibility and financial leverage has created a highly polarized setup, making CRWV a prime volatility and options-driven stock rather than a sleepy long-term compounder, at least for now. What market makers and options traders are doing. The derivatives data paints a very deliberate and strategic picture, not random speculation. 1. Volatility regime, elevated but controlled. Implied volatility 103.91%, greater than historical volatility 86.89%. Options are priced for future catalysts, not past movement. Market makers are demanding a premium to sell upside or downside protection, signaling expectation of a decisive move, likely tied to AI infrastructure announcements, earnings, or further NVIDIA-related developments. Beta 2.39. CRWV is trading as a leveraged AI proxy, amplifying both bullish momentum and drawdowns. This attracts momentum funds and short-term traders, exactly the crowd that feeds volatility. 2. Short interest, fuel, not the fire, yet. Short float 16.51%. This is meaningful but not extreme. Enough short exposure exists to accelerate upside if price pushes into dealer pain zones, but not so high that a squeeze is guaranteed on sentiment alone. Shorts are likely hedged or thesis-based, not reckless. 3. February OTM call stack, gamma staircase building. The February 20 OTM calls are the most revealing part of the setup. Key observations: massive open interest between $115 and $125, peaking at $125. This creates a classic gamma staircase. As price rises towards $115, market makers who sold these calls must buy stock to hedge delta. Each higher strike adds incremental hedging demand, potentially accelerating price moves. Translation: market makers are short upside gamma above $115. If CRWV sustains trade above the $115 to $120 zone, dealers may be forced into reactive buying, creating a mechanical rally, not a narrative-driven one. However, note the declining delta and probability ITM at higher strikes. This suggests traders are speculating on upside acceleration, not pricing in certainty. These are asymmetric bets, not conviction longs. 4. March $100 ITM calls, the real tell. The standout position: 105,157 contracts at the $100 strike. Delta 0.64, prob ITM about 50%. This is not retail lottery behavior. This looks like institutional positioning, either long exposure with defined risk, or synthetics replacing stock, or structured hedges against short positions. Market maker implication: dealers are already long a meaningful amount of stock delta due to this position. That reduces immediate squeeze pressure below $100, but above it, the February OTM stack becomes dominant. Net interpretation: how the game is being played. Market makers, comfortable supporting price near $100, increasingly vulnerable above $115, likely to suppress explosive upside unless price grinds methodically higher. Options traders, positioning for a measured upside continuation, not a one-day meme spike, expecting volatility expansion rather than collapse, using calls to express bullish exposure while respecting balance sheet risk. Shorts, not panicking yet, but exposed if CRWV sustains trade above the $115 to $120 zone. Bottom line, CRWV is sitting at the intersection of AI infrastructure dominance, NVIDIA validation, and derivatives driven price mechanics. The options market suggests this is not a blind squeeze setup, but a pressure building structure where upside acceleration becomes self reinforcing only if price climbs into key gamma levels. In other words, this isn't about hype, it's about where dealers are forced to react.
Okay, so the stock is up 12.4%. This is Monday, the 26th of January, 2026. 24 million shares have crossed the tape. Its 50-day average is around 29 million shares. Did we have any intraday high? Yeah, 108.65 has pulled back from that, from those levels. Yeah. Okay, so of course, the stock started trading, I think, sometime in yeah, March of last year. So it has now formed an underlying trend. It's bullish. Okay. Yeah, we don't have any currently no upper projections right now. We have, yeah, severely bearish, severely negative downward projections. Negative 14.6, negative 32.67, and then 14.67. Nothing to the upside projected as things stand right now on this daily chart, but indeed it has ample room to the upside. Yeah, even here, there's a pivotal projection here of 106. It's actually, you saw that it printed 105 and a pullback. So, but if it closes above this one, it's actually 105, 105.85. If it closes above it, then the probability of it testing at 109.91 improves. Yeah, it's actually come close to 109 as a matter of fact, going by the intraday high printed today. Let's see what we have on its 4-hour chart. Yeah, extrapolation is saying that higher prices are expected to continue to print at least up till the 3rd of February. Okay, on this 4-hour chart, projections are saying nothing to the upside. We have 74.05, 77.76, 83.76. Momentum is expected to remain elevated up till at least up till the 28th of January. Yeah. Yeah, there are upper projections here, but they're not in play at the moment. We have 109.98, 113.87. I think the market grid might give us an indication of the sort of prices that are possible, especially given that 108 we saw earlier on. No, it hasn't reacted yet. So let's look at the 1 hour chart. It may have something there. Yeah, let's see. Yeah, you can see it has potential to print up to 112.11. Okay, so it also has the potential to pull all the way back to $99.49. Yeah, so just see what you make of all of these, and I'll definitely continue to update you. Thank you very much for watching this video.